It's time now for Top Picks with Michael Hakes of Murray Wealth Group. Number one on this day, Aritzia, the Canadian women's fashion retailer, is becoming an increasingly large player in shopping malls in the United States. ATZ is the ticker symbol in Toronto. Why do you like this one, Michael?
Yeah, we like Aritzia at current levels. We had the chance to sit down with the CFO this week to hear an update of what their business is looking like, and we liked what we heard. Yes, it's above its low 20s stock price we saw a year or so ago, but it's also below its the $50 or $60 we saw prior to COVID. And it's all really about the future for Aritzia. And as you mentioned, they have about, I think, 54 stores in the U.S. versus 68 in Canada. And the runway for growth in the U.S. is huge. So they plan on about 8 to 10 stores per year in the U.S. in terms of opening. They may even go higher than that as we move through next year in terms of the ability, in terms of the horsepower they have to open new stores. So that would be a huge positive for Aritzia in terms of square footage growth. So the algorithm really moves to, for Aritzia, you see in terms of top line growth, you see 10 to 15% top line, which is very conservative on a same-store sales level, and then getting closer to 20% EPS growth. When I go back to the stores in the U.S., their new store openings are coming in well ahead in terms of productivity and payback. They're being paid back in less than 12 months, which is ahead of plan for the U.S. So their ability to accelerate store openings in the U.S. is very positive, especially given the payback is ahead of schedule. And if you fast forward over the next 18 months in terms of earnings power for Aritzia, you could definitely see them get above $3 in earnings. And if you apply a 20, let's say, multiple to that, which is actually quite conservative, if you have a growth retailer that has that U.S. runway and eventually a European runway behind that, then a 20 multiple is conservative, and you could get to that $60 number in the future.
How much, in the case of a fashion retailer, how much exposure do investors have at fashion stumbles? In other words, the company just not reading the fashion market correctly and not putting fashions out there that, in this case, women want to buy.
Yeah, that is definitely a risk factor that you always have to take into account. Their strategy is they have a test with some of the new products. They put into a sort of a group of stores, smaller group of stores, see how they do over the next 4 or 6 weeks. And if they see a big hit, then they can ramp up their supply chain. They're really good at, on the supply chain side, being able to rally the troops in terms of making that product across their whole store footprint.
Okay, and how's the company financing the U.S. expansion?
Through cash flow, free cash flow. Yeah, it's they have no issues in terms of equity raises.
Okay, let's go to number 2 today. Airbus. This one was mentioned earlier when we were talking about Boeing. This is the pick of Murray Wealth Group in the aerospace sector. One of 2 big players in the global aerospace market, the commercial jet market. EADSY. On, I'm guessing, the over-the-counter market in the United States. This is the French company. Is the owner of the former Bombardier C-Series business. Why do you like this one in this space?
Yeah, it really comes back down to the overall arching macro for the industry in terms of the oligopoly status of airlines, of building airline manufacturing, Airbus and Boeing. And Airbus is positioning within that, within narrow body versus wide body, a little better exposure to the narrow body. And the overarching move for airlines to deliver a better efficient product in terms of engine, better cost, lower cost per mile. Of course, the whole middle class around the world is getting larger. That supports airline growth globally. We've seen that from the backlogs at Airbus. They have 8,600 planes in their backlog. Mm-hmm. They've just came out a few days ago where they've blessed us 770 planes for 2024. So that's, you just do the math on that. I think in a perfect scenario for Airbus, they'd like to get to 1,000 planes per year. Mm-hmm. And you may remember during COVID, obviously no planes were being delivered, or very few. They had supply chain issues. So that's really the key. It's taking a long time, but they have 20,000 suppliers supplying them. And it's getting everyone back in alignment, they're able to build planes, get to that $1,000 plane per year level. Hopefully, that's sort of a pie in the sky, blue sky for Airbus, but the demand is solid, and there's margin improvements as they get their supply side in line.
Does the company stand to benefit from the stumbles at Boeing?
It's hard to know. They do really well on the narrow-bodied planes. Bombardier planes are doing really well in terms of sales. I think as a healthy market is better, safety-wise, in terms of the Boeing, it's just overall healthy, and Boeing would be better off. It's better off the whole industry as they get better.
Okay, let's go to top pick number 3 on this day, AstraZeneca PLC, another drug maker, a familiar name from the pandemic, AZN on the NASDAQ. As we'll take a look at the one-year history, it's up about, as you can see, 12% over the past 52 weeks.
Yeah, as you can see from that chart, it's off its highs in the spring. And Astra has the disappointment in the stock in Astra is in terms of their pipeline. As the stock ramped up, they had a new cancer drug that had a lot of optimism baked in. The market was sort of penciling in a $12 billion product by 2030 for this cancer drug. Unfortunately, they had some readouts through the summer which were not as robust as expected. So that 12 million expectation that the market had baked in has been moderated down to 4 to 6 billion as the target market for this cancer drug is narrowed. So that's one overhang that the stock is trying to get over. We'll have more readouts on that one drug over the next 6 to 12 months. And the other one is there's another little downtick this week, in fact, for Astra, was that the head of their China business is under investigation by the Chinese government. So unfortunately, Astra has been unable to provide a lot of visibility on what that is all about. But trying to leave those two things aside, we would expect Astra to be able to, just with their pipeline, leave that the cancer drug aside. Even with their current pipeline, we should expect 8% revenue growth over the next 3 to 5 years, and maybe a double-digit EPS growth. And that with that, it's only 16 times earnings. So I think a lot of these things will work its way out over the next year or so.
We've talked about big pharma stocks a couple of times in the show, and you said you hold Lilly and you hold this one as well. What do you look for in a big pharma drug when you're considering adding it to your portfolio? Yeah,
it's super important because you want your pipeline, of some visibility in a pipeline degree that's possible, and then you want patent expiries not to be falling off a cliff. So for Astra, for example, they have patent expiries coming off, so we have to replace all those patent expiries because prices go to much lower, and you have to have the pipeline fill in for that. So it's a never-ending battle of filling your pipeline with to offset those expiries, and that's the key. Okay, that's how Michael Hakes makes a call on a big pharma stock. Let's get to some bonus questions now from our email inbox. We'll have just a few more questions from Michael Hakes before we turn things over to Andrew Bell on Trading Day here on BNN Bloomberg. Sanjeet is one of our viewers, and Sanjeet wants to know, Michael, about your opinion on Microsoft. Hey, thanks a lot for your question, Sanjeet. We own Microsoft. This is one of our bigger names in our global growth portfolio. We've owned it since the inception of our fund. We think they're very well positioned, obviously, to benefit from from an enterprise perspective, business perspective, in terms of all the benefits of generative AI. They are investing behind that. So this last quarter, it was down a bit because they've kind of pulled back expectations in terms of the revenues they see from that, because they're capacity constrained. So margins are not going to be as high as people expect, because the revenue flow through has not been as what people think. However, they're launching the Copilot 365 that you see in terms of our ability to use generative AI at an enterprise level, is also being supported by a new application to help even extend that generative AI, where you can build your own agents within your firms. So I could build my own agent where I give it certain directions and then put it to a database within my firm, and it'll automatically produce generative AI results. If that can make sense. Okay, thanks for the call, Sanjeet. Let's go to Joe. Joe wants to know about Walmart. Joe writes, can I get feedback on Walmart, a stock that has done very, very well so far this year, really beating anybody else in the retail space. It's up nearly 50% over the past 52 weeks. Yeah, Walmart has done very well. Going forward, we think it's too expensive. the keys for Walmart is their e-commerce business, and they're able to somewhat kind of Amazon themselves in terms of the ability to do e-commerce, and that's why Walmart has done very well this year, and it's the ability for them to continue that growth. It's too expensive in our minds. We like Amazon better. I wouldn't buy Walmart here. It's just too expensive. If you look at their domestic business, it's bricks and mortar stores. How much they can leverage that going forward is another question altogether.
Okay, let's go to Gavin's email. Gavin wants to know about Lululemon. So we've talked about Aritzia, a successful Canadian fashion retailer. Here's another one, Lululemon, the athleisure wear maker, ticker symbol LULU in New York or on the NASDAQ. It's a U.S. listing anyway. What are your thoughts, Michael, on Lululemon?
Yeah, Gavin, thanks a lot for the question, because we actually just added Lululemon to the portfolio a few months ago. This is one that's come off its highs. It's $600. It got down to $250. We added it around $250, $260 or so to the portfolio, as we thought it was all overdone in terms of what you talked about earlier in terms of that product miss. Well, they had a big product miss with their breezewear. They had to recall it. They took a charge. Lululemon is much more mature than Aritzia, so you have to keep that in mind when you're looking at the opportunity for Lulu. But we think Lulu is going to be successful in getting their product lineup back in shape, and we can see it going back up into the the 450 level over the next 18 months.
Stock's up 7% today. Michael, thank you a great deal for all your help today.
Pleasure.
Michael Hakes was our guest here on Market Call. He's with Murray Wealth Group. Let's take a look at the markets before we turn things over to Andrew Bell and trading day. It's a positive day on North American equity markets, in stark contrast to yesterday when these markets were all down by about a percentage point or more. The TSX was down 1.4% yesterday, making back some of that ground today with a 100-point plus rally of about to the tune of 0.4 of a percentage point, taking it to 24,260. 24,900 and change is the all-time high reached, I believe, last week on the S&P TSX Composite Index. Here's a look at the price of West Texas Intermediate crude oil, which is almost always influential in the direction of the TSX. And some of those stocks are moving down today. There you see West Texas Intermediate crude up about 1%. I see Cenovus is actually one of the most influential decliners so far today, and so is Tourmaline Oil. It's a natural gas producer. Here's a look at the U.S. dollar. That's gold, actually. So there's gold trading at record levels at 2,751. Most of the gold stocks have done well over that period of time. We can take a look at Barrick Gold, for instance, ticker symbol ABX in Toronto, and Agnico Eagle Mines, ticker symbol AEM. Both of them have rallied on the back of that gold rally. There's Barrick over 3 years. You can see the year it's had in 2024. And AEM, we had a conversation with the CEO of this company just yesterday, as a matter of fact. That stock up about 90% over 3 years, almost all of those gains coming during 2024. Well, thank you so much for watching Market Call. Thank you for your questions as well. Have a great weekend, but don't go away. Andrew Bell and Trading Day is up next.